Hey everybody, Josh Sigurdson, World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen. And the last thing the banks need is more problems, as John and I have gone into a million times before. I mean, the amount of debt that the banks are facing, they're completely bankrupt. Nothing has really changed much since 2008. It's just kind of gotten worse and been pushed off further and further, which of course means it's going to come down even harder in the end. But I wanted to go into this article from Financial Post, which says, credit quality is deteriorating in Canada and banks are feeling the impact. And as the article goes into, Toronto Dominion Bank and Canadian Imperial Bank of Canada both reported fiscal first quarter results that included higher provisions for loan losses, contributing to earnings that missed analytics estimates. Toronto Dominion, Canada's second largest lender by assets, set aside $850 million for soared loans in the quarter ended January 31st, up 23% from a year earlier, and the highest level in at least 2 years. The lender's Canadian and U.S. retail divisions had roughly equal shares of the provisions at about 36% each of the total, with the rest recorded mainly in the bank's corporate segment. And I quote, "The fourth quarter and the first quarter of the year always tend to have elevated provisions because of the holiday spending season, so we tend to see that seasonality in cards and auto." Toronto Dominion's Chief Financial Officer Riaz Ahmed said in a phone interview Thursday. In Canada, bankruptcies are up a little bit, and we do see a little bit of rise in delinquency in our retail cards in the US. None of them would rise to the level of being of particular concern for us. CIBC's provisions more than doubled across the bank, surging to $338 million, also the highest in at least 2 years. Most came from Canadian personal and small business banking, the lender's largest division, which saw a 41% jump in provisions to $208 million. Canadian commercial banking set aside $43 million for credit losses, while the U.S. division earmarked $16 million for provisions, and its capital markets unit had $66 million. A lot of impairments that took place this quarter felt like unique events which I'd like to think won't transpire again, CIBC Chief Risk Officer Laura Dottori-Attanasio said on the company's earnings conference call Thursday. "We're not seeing any systemic or any trends of concern in our book. We continue to have strong credit quality." The bank's calculations for loan loss provisions in the year earlier period were affected by accounting changes. The two Toronto-based banks also followed their Canadian rivals in reporting poorer performance in their capital markets operations, driven down by trading in a period company executives have called challenging. Toronto Dominion's capital markets results were the worst among the big Canadian banks, with a $17 million loss in the quarter from its TD Securities business, as investment banking fees fell and trading revenue was halved from a year earlier. The wholesale banking business is rarely part of the investment thesis for TD, but it nevertheless forms an important part of the bank and one that can swing numbers, Robert Cedron, an analyst at CIBC Capital Markets, said in a note to clients. Swing numbers it did, moving to a loss that took the overall results notably below consensus even before considering the higher loan losses. Trading at the company's TD Securities division totaled $251 million, down from $515 million a year earlier. Toronto Dominion CFO cited significant market volatility for what he described as a challenging quarter for the wholesale division. The revenue was down as volatile markets made trading conditions difficult and kept clients on the sidelines, Ahmed said. CIBC Capital Markets, meanwhile, had earnings of $201 million, down 38% from a year earlier, with the bank citing lower revenue from equity derivatives and interest rate trading businesses, along with higher loan loss provisions. And there's a lot more stats to go into here, John. Finally, I just want to mention Toronto Dominion reported fiscal first quarter net income that rose 2.4% from a year earlier to $2.41 billion, or $1.27 a share. Adjusted per share earnings totaled $1.57, missing the $1.71 estimate estimate of 12 analysts in a Bloomberg survey. So there's a lot to go into, John. What do you think about all of this? I mean, can you just explain to the viewers what this all means for the banking system and people in general?
Well, what this means, Josh, is we're really hitting a peak debt moment here in Canada, because we didn't really get hit in 2008 as bad as the United States did, because what happened there is they actually plummeted the prices, 40-50% in real estate, for example. Meanwhile, it was just a minor little blip on the scale here in Canada. We just continued to borrow out massive amounts of money. Canada is in the same category as Australia, as Hong Kong, as Singapore, as Oslo in Norway, and of course you have here in Canada, you have the two major markets, Toronto and Vancouver, that are now really starting to hit a downturn that they haven't seen in a long time, since 2008. If you take a look at, for example, the trend on the housing prices in Vancouver, what you see is just an insane amount of increase at the top. Like, it was as high as 30%, 33%-ish in Greater Vancouver area. And then you see it actually dropping now over the last couple of months, almost since about October. It's been going into negative and losing value in Vancouver. And that's the same thing that we're seeing in Toronto as well. Toronto's really getting hit hard as well. We did a video on that just recently. And what that does when your house goes down in value, you can't use it as an ATM anymore. You're starting to move towards negative equity, where your mortgage is higher than your actually loan. Your house value. So that is a huge strain on this whole Ponzi scheme that the banksters need in order to keep on, lending out more and more money.
What are you saying, that houses aren't assets, John?
Yeah, well, your house could be an asset if you actually buy it and then sell it for a profit. Yeah, sure enough, that's an asset at that point, but it's not an asset until you actually sell it. And if you used it as an ATM for many years, you propped it up, you have it maxed out to the max of what you can borrow, and then housing prices drop 30-40%. Well, and now you're in big trouble, and your house is not an asset. It's a it's still a liability, but now it's a massive liability, and you can't really get out of it. A lot of people might just file for bankruptcy and just leave the house. That's what we saw in the United States when all these mortgages went bad. And then, of course, we got to remember in Canada too, there's been a huge push for auto loans. Like, we're looking at some auto loans going as low as long as 10 years now here in Canada, which is insane. And I also have seen a couple of places, even in Winnipeg, which is not the biggest bubble at all. It's actually some of the lowest priced still markets in Canada, but we're seeing here in Winnipeg, there's pictures of places like car stores that are saying no job, no income, no worries. We'll get you into a car.
Well, yeah, there's one loan after another, and one loan covering another loan, and it just gets insane. John, can you go into the unsustainability overall of the credit bubble, which we're seeing not just in Canada, the United States as well, and places all over the world, just based on people's debt dependency?
Yeah, no, there's a massive debt bubble around the world, Josh. And as we've seen, debt has almost tripled. And when you see the bank's balance sheet, they've been buying up all this, like a whole bunch of bad debt as well. Their average from 2008 to 2018, when I actually did those 10 years, I found out there was 300-something% plus that the central banks had to buy of bad debt off the bank's balance sheet. So that's basically cleaning up the garbage asset that the bank had, giving them fresh cash back, and say, hey, you can keep your cash in deposits in the Federal Reserve Bank or the Canadian Central Bank, and then you're fine. And it's the same in Canada. All of them have been doing this massive quantitative easing, been buying all kinds of debt. But it's interesting, Josh. I want to show you this chart. I've been showing it before, but I think it's very important to actually add to it and show it again, because this one shows the 2016-17 cash to deposit ratio for the banks. And what's interesting, the banks that was losing earnings estimates, Josh, on their dividends, was the banks that are in the worst shape when it comes to cash to deposit. You have National Bank, you have CIBC has just about 2%. You have Scotia has 1.5 something. Then you have TD, of course, with 0.55, I believe the number was. So that is not a lot of cash available to the customer if you have a huge bank run. If people just wake up and say like, hey, that maybe we shouldn't trust the banks to keep our money, and maybe the money in the bank is not mine. That's a huge thing that people need.
Wait, people should question the bank, the biggest cartel outside of the government in history. People should not trust them. You mean?
No, well, the banks are the biggest cartel in the world. They have, their head honcho, Jamie Dimon, sitting over there, drooling over his $1 billion salary, first billionaire banker in history. These guys, they thrive on...
That we know of.
That we know, yeah. But billionaire anyways. They might have been equivalent, so back in the day, being millionaires and so on.
That's
right?
a problem with inflation, isn't it?
Yeah, because of inflation, exactly. No, what we're seeing is we're seeing a huge problem here, and also people say like, well, the credit unions are not are way better shaped than the banks. Actually, in Canada, they're not. They're way worse. When you look at the average, I took this is a chart of the biggest credit unions in every single province in Canada, and you can see, most of them are from about 3%, 3.5% and down of what they have of money available for you if you wanted to withdraw the money out in physical cash. That should scare a lot of people. For example, one of the credit unions that I use, a Cinnabon credit union, they have a limit of $400 a day that you can take out of their ATMs. Mm-hmm. And that should be kind of a warning signal. There's been people there that, I had a mortgage broker that I know that told a story of a guy that had $100,000 that he tried to get out of that same credit union. And they said like, no, it might take up to a year to get that money out for you. Well, why? Why would it take that long for him to get that money out? It's the whole thing here is
probably because they don't have it. I don't know. Probably something to do with that.
Yeah, it definitely could be, Josh. Well, according to the numbers that I looked at, there are some credit unions that are in serious trouble. And it's actually, a lot of them are Manitoba with interesting things, Josh. You see Steinbach Credit Union and Cinnabon, and all of them are kind of lower. They're all under 3%. But it's getting crazy. And the reason why is it's this whole debt cycle where people are borrowing money into existence to feed the system itself, because you need constant new debt to then devalue the debts, not the value, but increase, you could kind of say the value, but the value of the debt actually decreases the more you print, right? Because the more money you have in circulation, and this is e-money, debt money, the less value it has the Canadian dollar. Just look at the value of the dollar versus the United States dollar, how much it's dropped. It's dropped tremendously. It's 0.75 something right now. So it has lost a lot of value because we printed substantial amounts of money into the system to prop up this whole housing bubble. Because in Canada, I wrote about it in my book, Canada, the Greatest Economy in the World, ? Where I went into great detail how dependent Canada is on real estate. It's about 20% of their economy is actually the real estate sector and surrounding sectors that feed into that, together with the financial. That is not account for the financial sector, which feeds into that as well, big time, because the thing is with banks, their business model is to print money out of thin air. And if they can't do that, well, they can't really make very much money. When they print money out of thin air, they get all these little fees, they get all these little interests on the money that circulates. And they need also you to, here in Canada, it's terrible for the mutual funds, for example. It's just a massive financial rape. I don't know how, I talked to several people here in Canada that are high up in different investment institutions, not necessarily the actual guys that are ripping people off and like the big guys, but they are aware of, and they're telling me the story of how bad these fees are on the mutual funds. Some people have been looking at where there's a fund in a fund where they pay like 5-6% on it. And it's we're constantly getting more taxes, right? With the current government, they're increasing taxes all the time. Look at Winnipeg. I saw he posted a article about the city of Winnipeg. He was actually Bowman was saying 10% increase in the property tax, and this is all about taxation and sucking money out of the economy. That's
that's what it's all about, though, John. I mean, that's what the government depends on, and that's a major issue here. Is like the bottom line with all of this is that the banks, if your money's in the bank, it's not yours, it's a bank's, as John mentioned, and of course they depend on the dependence of the populace. Them and the government, they work hard to push people into debt.
Exactly.
They work hard to push people into poverty. They are the ones that print the currency. Then you end up paying, off the interest on the debt with a massive amount of your taxes. People work their butt off day in, day out, and end up paying half of their money or more to the government to pay off the interest on the debt and then make inefficient, public quote-unquote services that most of us didn't ask for. It is it's a complete scam. It's disgusting. And you look at these banks, I mean, they're completely bankrupt. They are not going to last a whole lot longer, and they're getting desperate. And when they get more desperate, they get more predatory. And this is why people have to understand what we are saying and what we have been saying for so long. We never said on this day everything's going to crash. We've always said eventually it's going to crash. It has to. It cannot sustain itself. It's just fundamentally it has to crash. But again, we never put a date on it because you cannot predict those dates ahead of time. But one thing I know is the inevitable will happen. All fiat currencies crash. They always have, they always will, going back to 1024 AD in China. And we need to take our necessary precautions here to ensure that we and our family are safe going forward. Because the fact of the matter is this will affect every last one of you as they extort the masses more, as they inflate the price of living more, as they get more and more unsustainable. They will be more and more predatory in order to stack up their, their queens and kings against you, the pawn. So folks, do not be sacrificed like a pawn for the king and the queen. Work hard to be independent, self-sustainable, responsible, break free from that system, educate yourself. John, this, we always go really long with these videos, so I just wanted to start to wrap it up here. John, can you explain just for the viewers watching, especially those that are watching for the first time here at World Alternative Media, what your bottom line is for them going forward?
Well, the bottom line here is the Canadian economy is slowing down. It's hit peak debt. There's no way back of trying to print over this again. Are we going to try to just run interest rate down to zero? That's not going to help the economy at all. It's going to just make it worse. And with the taxation too, you're strangling people on the one side, so they're getting into more debt to be able to afford the same things that they had before. It's just a vicious cycle. And when you look at the corporations that have been struggling the most in Canada, it's actually the manufacturing and energy sector that is really struggling because
not to mention the non-existent small businesses.
Yeah, because they are feeding into the system itself, right? So when demand is low from people that can't afford things, they'll use less energy, they'll buy less things. And you'll get less growth. It's just a natural business cycle on top of that. Unfortunately, the business cycle is really like a debt cycle where everybody just indebts themselves, and the worst indebted corporations, they fail. Look at, for example, Bombardier just went out and are asking for more debt because they got bailed out for the government, but they need more debt now. And they actually went into junk debt to raise capital to try to get some money for their bankrupt corporation. It's just that the government are funneling in money. And then you had the SNC-Lavalin scandal just recently,
which of course I did a video on, which I think everyone should check out as well.
Yeah, exactly. And but what happened there? It was a bailout of a actually corrupt organization, and SNC-Lavalin is probably one of the most corrupt corporations in the world. They're all over the top list of corruption in the world. And of course you got the little Trudeau there from Quebec himself, good buddies with these guys and wanting to save their ass from their terrible and corrupt, business model that they have. So you're seeing a lot of this where you have the corporate fascism, the corporate socialism. They're talking about, it's so bad capitalism. No, it's actually socialism. It's socialism for the rich here in Canada.
Yeah, capitalism has to reign free of government intervention and restriction and aggression.
Yeah, exactly. No, it's just the complete, these liberals, they believe that, they're so nice for everybody. Meanwhile, I've seen tax increases. My wife's seen tax increases. Everybody else that's in the middle class sees tax increases. And people are getting to more and more debt. People are really starting to struggle and say that, hey, I'm really starting to struggle to pay my bills because I have so much debt. I just keep on accumulating it because it saves me from not being able to pay my bills a lot of times. That's what a lot of people say around, not just here in Manitoba, but all, especially in Toronto and Vancouver, the biggest hit markets, right? So yeah, you're just seeing this big bubble, and it's time to protect yourself. Get out of the banking system. And this, of course, our opinion, but looking at history, it's a good idea usually to not be in the banks when they fail. It's being off the grid, the banking grid, as we call it. Get into cryptocurrencies that you could actually use as medium of exchange. Look at what's happened in Cyprus in 2013. There was massive capital controls, but people started to use cryptocurrency because, there was only Bitcoin at the time, but they started to use that because they saw the huge benefit of not having government control over your money, which they saw there. And then, of course, precious metals is your life, it's your insurance policy. And when you talk about that, gold is at record highs in Canadian dollars. It might not be in the US dollars, but it's definitely in Canadian dollars because we had all this inflation, Josh.
Yeah, and of course, we have to check out Canada, the Greatest Economy in the World, ? A book that John wrote a couple years ago, which everyone should look at when it comes to Canada. Of course, Trudeau says that you, as if you're poor or in poverty, that you don't pay taxes. I think most of us beg to differ. I know people who make $10,000 a year, and the taxes are crippling them as well. People just have to wake up to the fact that they're being used as pawns and that the government isn't there to help them. It's there to push them into servitude and subservience. And that's a whole plan. The government thrives off of debt. So do the banks. And we need to break free from that and be self-sustainable, financially responsible, independent, free human beings, and break free from that complex of control by these organized crime rackets who steal from you and pillage you and then use you as a way to virtue signal themselves as the middle class dies off. It's all completely disgusting. Food, water, shelter, self-defense. You're not gathering things for the toughest guy on the block. And as John mentioned, gold and silver. We do have an affiliate link with Mike Maloney, which is below, that everyone should check out as well, from Gold Silver. Great company and great person, Mike Maloney, great market and monetary historian. And of course, cryptocurrencies that are properly decentralized and the blockchain infrastructure that's properly decentralized and fundamentally useful that can replace much of the state. So please, folks, look into all this stuff, break free, be independent, and of course, check our outro video because we are getting insanely shadow banned right now. It's insane. It's absolutely insane what's happening to us here on YouTube. So please check that out. And until next time, thanks for going into this with us, John. This is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth.
Be the change.
Like what you see here, Wham? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so heavily demonetized and censored by YouTube as these guys come in and flag all of our content as hate speech. The shadow banning is getting really bad, guys. Also, check our Bitcoin address right here on the screen or in the description below. We really appreciate it. And of course, check us out at the Red Pill Expo 2019. Of course, the great G. Edward Griffin and so many other incredible speakers will be there. Our link for that is below as well. And we cannot forget Mike Maloney's goldsilver.com, which you can also find in the description. One of the greatest market and monetary historians out there. We really encourage everyone to check that out. But until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that. you.